Welcome. You're watching Spot on the Money Television, and I'm your co-host, Mark Henry, and that means I'm joined with Ali, president of Kinetic Financial.
How are you, Mark?
Better than I deserve, and I'm so happy to be on this show. When I got the call that you had a spot open where I could host, I do these around the country, but I wanted to be on this show, and you should always want to be on one in my profession, but I really wanted to because y'all are doing some crazy stuff. I mean, I want to make sure for the viewers that are watching, this is an unscripted show. We're going to talk about a lot of financial topics, some potentially controversial. And that's okay because we want to challenge conventional financial wisdom in the next 28 minutes. So if you haven't watched the show before, you're in for a treat. But it's unscripted. Like literally, I've got a phone number down so I don't screw that up in a few minutes when we get an amazing opportunity for an offer to come in. And I've got the notes, and that's it. I have no script. And so I want to jump in and put you on the spot right out of the gate.
Let's do it. It's called Spot on the Money.
Well, that's why I did it. You said spot on the money. I'm going to put a spotlight on the money right now. I'm hearing a lot of people ask questions about should they be doing a Roth conversion. And there's a lot of controversy about this, or maybe not controversy, but a lot of topics on this about should we be doing this?
Yeah. And, you know, it's kind of one of those funny things. There's only 6 tax-free strategies available to us here in the United States. And one of the most powerful ones is Roth. And people don't know of all of their options. I mean, you say the word Roth, and almost everybody, all of our viewers have heard of Roth. I'm sure you've heard of Roth. But
how do we use it?
And many people don't know all of the options, right? They don't know about just contribution options, conversion options, partial conversion options. And there's so many strategies that you can use today to help offset the taxes on those conversions. I was just working with a client just recently looking to do some large Roth conversions but didn't want to pay the taxes. So we were able to set up a charitable trust that helped offset those taxes due on the Roth conversions with a charitable deduction. Now, in a charitable trust, the charity doesn't get anything until he passes away, but he gets the deduction today. And so these are some of the more advanced strategies that you can be using in conjunction with Roth. So it's not just Roth all by itself. You got to know how to do other things that can help complement those Roth strategies.
All right, so let's break that down a little bit then. I know for a lot of higher income earners, that I'm thankful to be one, I can only put a few dollars in this thing. They won't let me ever. I'd like to put more.
That's the thing, is people get confused. They think it's all about Roth contributions. It's not. Contributions are limited by a certain dollar amount every year, depending on your age.
Right.
And for most people, if you have a certain level of income, like a lot of our viewers out there, you have a certain level of income, you can't even contribute to a Roth, right? So that's not what the game is about. It's really about conversions, and not about full conversions, but partial conversions. Because you don't want to bump into a high tax bracket and be paying 37% in taxes on that Roth conversion, right?
Correct.
But if you can do this right and you can offset it with other tax deductions, remember, if you're earning under $300,000 and you're married filing jointly, a Roth conversion can cost you 24% or less. If you're earning less than $170,000 and you're married filing jointly, it could cost you less than 22%. So Roth conversion under our current tax laws may not be good. Yeah, it may not be that expensive depending on if you do it right. And that's what we see is people avoid this because it's complicated. Work with a good financial planner and they'll hold your hand, show you every step of the way, the taxes, the conversion options, the investment options, and that's where you really get the bang for your buck.
So I want to go with what you just said there. I told you I'm going to be tough on you today.
Let's do it.
Spot on the money. Why aren't these big box retail firms talking to their clients about this?
Because it doesn't generate revenue. In fact, it might chop their revenue, right? Because when you do a Roth conversion and you pay some taxes, let's say you pay 20% in taxes. Now, all of a sudden, that account balance is 20% less. So
but it's in a Roth now. It's going to grow tax-free.
It's going to grow tax-free. It's worth it. Don't get me wrong.
Okay.
But that advisor just took a 20% cut on their fees. And so not only did they not make any money, but they actually lost money by advising you to do the Roth. However, it's the right thing to do, not just for you down the line, but also for your heirs. And so while I do think that advisors out there need to make a fee, make a living, it shouldn't be the thing that drives them. And that's why we act as fiduciaries. As a fiduciary, we have to act in your best interest. And that makes all the difference in the world.
I've done these shows around the country. I have not had someone explain it to me in a way that my simple Southern mind can understand. It's really about that. So like when I look at these statements from these big box retail firms, they all have that asterisk. Consult somebody else.
That's right. We actually challenge our viewers. We did it in an episode before. I'll do it again. Get your statement out. I don't care what firm you work with, whether it's Vanguard or
whoever, doesn't
Ameriprise.
matter.
It doesn't make a difference. Wells Fargo, it doesn't make a difference. Take a look at your statement. At the bottom of your statement, it probably says the same thing. We do not provide tax or legal advice. But Mark, as a certified financial planner and a chartered financial consultant,
yes.
I believe that taxes are going to play a huge part in your overall financial plan. So if you're not talking about taxes, you're definitely missing a big part of the puzzle.
I'm kind of blown away here because the reality is, I don't know how you could think you have a financial plan if it doesn't include taxation.
I mean, it surprises me because we know taxes are going to be one of the big factors in how your financial plan plays out.
Yeah, it works out, how it works out.
And yet people don't do anything. You know why? Because most people think that I don't have any control over this. It is what it is, whatever. It is what it is, whatever.